All right, good morning, gang. Welcome back to the live room. How is everyone doing today? As always, can you hear me? Can you see me? Just had to deal with trying to warn people about fake accounts. I got a message from someone on LinkedIn who was like, "Hey, you never followed up on the conversation we were having." And he sent me some screenshots of the conversation. I had to be like, hate to be the one to tell you, but that is not me. Sorry." So I had to put up a quick warning, but hopefully you guys that are with me on a regular basis, for you guys that know how Jason and myself talk, how we operate, our philosophies, our morals, our ethics, all that stuff, um, you know the warning signs. And that's why we always tell people, hey, get to know us first get to know anyone first before ever giving anyone money. But we're gonna hop into it today. I gotta leave early today, live rumor, so I gotta try and be out of here by 9 o'clock. So we're gonna be short and sweet. Of course, if you're watching on the live stream, welcome as well. Let's get started today. You can see there's a lot on my radar for the day, a lot of interesting things in the market. We're gonna start off by taking a look at the economic calendar, because we do have some high impact news that's on the radar for today, and that is going to be at 10 o'clock as Fed Chair Jerome Powell testifies. So, again, he's our Fed chair here in the US. What the market is looking for is they're looking for any signs of any anticipation of like the timing of our expected policy change. So they'll be dissecting his questions and answers and all that fun stuff, looking for any type of clue for when this policy change is going to happen. Is it going to be earlier than expected? All of that fun stuff. I do believe he testifies again on Thursday, but we'll get to that on Thursday. Cody says, crazy how easy it is for some people with no lies to make those fake accounts. Yeah, I always say this, man, because some of these guys are really good. You got to give them credit. I always say this, and it's the same thing for like bad people, because it's interesting. Like, I went to this seminar years back that talked about leadership and the traits and the skills of leaders, and the traits and the skills of leaders are the same traits and skills of like your most successful terrorist. And you got to understand, leadership is not necessarily a good thing. It's what you're leading for, right? Leadership is the ability to get people to follow you, influence, stuff like that. And I always say some of these people are really genius. Like I followed myself once, right? That's how good it was. So one guy was so good that I followed my own fake account. And I was like, man, this guy got me. And you always wonder, like, what if you use that effort for good? You know, what if all the time and effort you invested in making these fake accounts and copying these pages, and as soon as one gets deleted, another one pops up like a virus, right? What if you use that time and effort? Because I can imagine that it does take time and effort. What if you use that to do something worthwhile, like focus on your trading, right? Friday's accountability session, we spoke with a few traders who are investing, 20 hours a week in trading. What if you used it to work on something like that? But that goes down to, what we have on the inside. And some people are just, I don't know, triggered to do good, triggered to do bad. But hey, it's flattering, right? So today's trade of the day, right? We're going to go back to the dollar Canada. By the way, I did get triggered dollar yen. For you guys that remember that trade, that was the pullback trade with a bat pattern. Thank you for whoever gave us the heads up here in the live room about that bat pattern. Did trigger, move the target ones, or we're trying to see if we can get an extension. But we're going to revisit the loonie here, the dollar Canada. And this is one that we viewed last week as well. And if you guys are new to the live room, if you're new to watching on the live stream, right? A lot of people get bored because you come into this live room on a daily basis and you're like, man, we just looked at this pair yesterday. Man, that's the same setup that we looked at yesterday. The truth is, right? Good trading is boring. Would you guys agree? I'm talking to the live roomers right now, or anyone that has experience. Would you guys agree? Good trading is boring. And if you're trading successfully, it isn't really about finding something new and shiny each day. If you're doing that, you're a system hopper, right? If you're looking at one thing one day, then another thing another day, and then every day there's something new and exciting, you're exciting yourself, but you're doing nothing more than being a someone that walks into the casino and jumps from game to game. The truth is, if you're doing proper analysis, and especially if you're doing it on a higher time frame, the ideas that you have don't change too often. They morph a little bit, but you can have something on your radar for days and weeks ahead. And that's a good thing because successful traders, right? We're IDing these things days and weeks ahead. We're running through how we're going to handle them over and over in our head. If this, then that, if this, then that, if this, then that. And then by the time or if the opportunity occurs, we have a much lesser emotional state when it comes to entering them because we've gone through the game plan, right? It's no different than I've been watching a lot of Tom Brady and Man in the Arena because I'm a football junkie and I love like the X's and O's. Like, I can talk X's and O's in football all day. I love it, right? And one of the things that he talked about was that in practice, right? Their coach, Bill Belichick, one of the greatest coaches of all time, he is a tactician, a master tactician. And they watch a lot of film, and they watch this film and they practice this one thing over and over again. He said, when these three men move right before the snap, this is what's going to happen. And Tom Brady says it was a big play, and I think a playoff game or Super Bowl. He was at the line, and all of a sudden, before he called the play, before he called hike, these three men moved, and all automatically, right, like muscle memory, he snapped right back into it. Boom! If these three men move, right? If these three men move, then this is what they're going to do. Hike the ball. They did exactly what they're going to do. And boom, he threw the ball, completion, touchdown. And it's all because he practiced it and rehearsed it. If he didn't practice and rehearse it, he would have been caught off guard or he would have hesitated. And in football, you hesitate, you're going to get sacked, you're going to throw an interception, you're going to make a bad play. In trading, you hesitate, you're going to miss a trading opportunity. Then you got to deal with the emotions of fear of missing out, and you may enter late, and there's all types of stuff. So rehearse your situation, right? Rehearse your situation. And real quick, I got a question on backtesting on the YouTube. I'll get to that in a little bit. But let's revisit Dollar Canada. Dollar Canada, this was an interesting one, right? So bigger picture, we've got a head and shoulders here, right? Can you guys see it? A head and shoulders top. We've come up the previous structure looking left. Again, this is going to be a revisit from last week, but fresh for some of you guys who are joining me for the first time. We've got a head and shoulders top. And we're currently trading right around the neckline, right? That red line is a little volume thing to the right. The neckline is going to be about right here if you're doing a horizontal neckline. Now, if you remember, when we dug down into the lower time frames, Akil had this great idea. I said, you know what? We have an advanced pattern formation trading, X to A to B, B to C, Gartley pattern right up here. We can trade to Gartley, sell it at the D completion, use it as an aggressive right shoulder entry for the head and shoulders, and trade it down to trading glory. And then look what happened. Gartley came close to completing, never did. Now, maybe if you're front running by a whole bunch, maybe you got in. I didn't. So, yeah, a little bit short. So a little bit depressing as he ran all the way down. There was also a near miss cipher down here as well. But that's not as disappointing as the Gartley. So you got two choices. You can get all emotionally upset, but the reality of trading is you're going to miss a lot of trading opportunities by like a few pips, and that's just going to happen. Got that 128 and held strong. We ticked right above it, Cody, and then boom, beautiful 3-bar reversal. Right? So you got two choices. You can either whine and moan about it, or you can just go back to your analysis and think about your original plan, right? The original plan was a head and shoulders. This was an aggressive right shoulder entry, which would have been great, but, didn't happen. So you move on. We still have the head and shoulders. We're still flirting with the neckline, and price is putting in a pretty good kind of combination. And what I mean is this, or a pretty good series, right? So obviously this was our right shoulder. Since then, and you can see there's a whole bunch of kind of mumble jumble jungicide here. Since then, we retraced down. We bounced back up. Now, you look at this retracement right here. Would you say that's a deep or a shallow retracement? Before we're eventually kind of testing the lows again. Is that a deep or a shallow retracement here? Back up to 127s. Look at these even handles showing love on the loonie, right? These psychological, a shallow retracement, right? So you think about like this, right? We always think about the market in the terms, or at least you may want to get in the habit of thinking about the market in the terms of buying versus selling pressure. Give me 1 second here. Buying versus selling pressure. Is there any? There is sound on trading view. You guys listen on trading view. You getting sound over there? Mike says it's working. I just switched it, but you should be getting sound. Right, buying and selling pressure. So you think about it as a battle between the buyers and the sellers, right? So, and the question is the balance or the imbalance, who's in control? If the buyers were in control at this level, right, what would we see? Trading View and YouTube for the first trade of the day. Then I shut them down, I kick them out, and we fully focus on some live room stuff. Okay. What would we see if the buyers were in control? Would we see a shallower retracement or a deeper retracement? A deeper retracement, right? We did not get that. So we're getting clues, right? Buying pressure is either slowing down or the selling pressure is strong enough to kind of keep it to a lower level. Now, I don't know how many times we're going to bounce or if we're even going to bounce, but as long as we continue to get that combination, this is adding clues that who is in control, buyers or sellers, if we were going to get some type of like slow dribble. Like imagine dropping a ball, then the first bounce is higher, then it gets lower and lower and lower. If we continue to create lower highs, sellers are in control. It's also going to create one of my favorite patterns, or it could be a type of my favorite pattern, which is going to be a descending triangle, which is a sign of a bullish, or excuse me, a bearish break. Yep. So we have that completing or potentially forming at the neckline of a head and shoulders pattern where we're expecting and waiting for a bearish break anyway. Good sign right here on dollar Canada, right? As long as we don't take out these highs, then we got to redo our analysis. But good sign right here on dollar Canada for a potential break to the downside, for completion of our head and shoulders. And we know from the analysis last week that we can expect a move lower. We can bring some fibs back on and kind of redo it a little bit. But if we do, I'm in the wrong deal here. If we do Fibonacci extension, let's say from, actually, let me delete this first. If we do Fibonacci extension from swing high to swing low, head to right neck, boom, we have that. If we do one-to-one measured move, right, since we had a little AB equals CD confusion last week, we've got that right down here as well. And again, if we look left, we've got a pretty decent levels of structure that we looked at last week. Got one being right here as a conservative level, then another one being right there. So decent opportunity here on the dollar Canada. Again, you could bring in Fibonacci retracement as well from this ultimate swing low to swing high. Sorry about that. Look for confluence, right? Here's that zone, 1618 and 127. Let me, before I kick these guys out, there was a question on YouTube about backtesting. When you were backtesting a strategy like a head and shoulders, you set up rules of engagement and a time frame to trade. You go back 7 years, but you only managed to test 35 trades over those years. Is this normal? Live rumors, what would you say? When you backtest a strategy like a head and shoulders, you set up rules of engagement and a time frame to test it on. You go back 7 years, but you only managed to test 35 trades over those years. Is that normal? And the answer is, maybe not. Depends on the pair. Depends on the time frame. Question on TradingView about volume indicator. Which volume indicator? Please don't call me bro. Just say how to read volume indicator, please. But yeah, who knows? There's so many variables. It depends on the pair. It depends on the time frame. It depends on your ability to recognize head and shoulders. It depends on your ability to say what is a head and shoulders and how you're entering a head and shoulders. You're going to get a lot more opportunities if you enter aggressively at the right shoulder versus if you need a pullback. So there's really no answer to that question. I think the bigger question that you're asking is, should I look for more? Right? And the answer is yes. Right? If you want a bigger sample size, just go back some more years. Go back further than 7 years and get a deeper sample size. But there's no expectation for how many tested opportunities you should get per back testing. You get what you get, right? Like you tell the kids, you get what you get. You don't get upset, right? You get what the market gives you. You get what the market gives you, and if you feel like your sample size isn't big enough, then you load up more data, or you start doing your paper trading and add opportunities to your back testing that way. and you accumulate it that way. So maybe not the answer you wanted to hear, but unfortunately, that is the answer to the question. So, trading view guy, if you want to follow up on that question in the next like 30 seconds, I'll answer it for you. Both sides, volume. So you read the volume indicator by basically looking at the length of the bars. So higher bar is going to be more volume, shallower bar is going to be less volume. So the ones at the bottom of the chart, you can see if it's green, blue is going to be the lowest, green is going to be above blue, then you have yellow, then red is going to be very high volume. Here on the side, you can just look at the length of the bar to the left. The more it sticks out, the more volume is present at that area. So I'm not sure if that's the answer you wanted, but that's what I get from the question. If the question is how do we use it in our trading, or how do we read it and use it in our trading, that's a much more complicated answer that we don't have time to get into here. But as far as reading the indicator, the bigger the bar, the more volume present on that particular bar. For the volume indicator at the bottom, more volume at that particular level for the volume indicator on the right of your chart. So hopefully that clears it up. All right. Thank you for joining in for the live stream. I'll see you guys tomorrow, same time, same